Peter Cardillo, who's the Chief Market Economist at Spartan Capital Securities. Good morning, Peter. How are you?
Fine, thank you. How are you?
Not too good over here. We're all really jittery just looking at the way the Dow closed last evening in the United States. We're all really nervous about how the Nifty is going to open here and how the markets are really going to pan out over the rest of, actually today's the last day of the week, so today actually is really what counts. What cues do you think we can take away? How do you expect the markets to perform here today?
Well, I think we're probably going to, have another down day, but I think it's capitulation time. Yesterday in the States we had a lot of uncertainties, and that uncertainties created panic selling. We saw the Dow that closed over 2,000 points, and the S&P moved into bear market territory. So with the S&P and the Dow in bear market territory, and of course, the news regarding the coronavirus continues to worsen. So that, I think, is causing confusion, and that confusion, I believe, will be met with a flush out. And I believe that part of that flush out from the selling that we saw yesterday will continue, but I think we're about to make a bottom. Now, that doesn't mean that we'll move out of the bear market, no, but I think the worst of the decline may be nearing an end. So with that, there are a lot of good bargains out there, and you have to also remember that this market has discounted a recession, a mild recession, discounted a quarter or 2 quarters of sour or negative earnings, and so the scope of the decline, I believe, is now reaching a peak level, and that should take us into a sideways movement, although we stay probably within a bear market environment.
Right, well, it's really reassuring to hear that from you, that you think the worst is already priced in. So if there is any recovery at all that's notable, we should see a fair bounce as well. Now, let's talk about the countermeasures that people are taking. Central banks are really activating themselves. You're looking at a possible rate cut coming in. The Fed in the US also made some announcements yesterday. They're planning a $500 billion, kind of relief for the market. So do you think that's in line with what's really expected? And do you think monetary easing is what is going to fix this problem? Or do we need to look at some other measures as well?
Well, there's no question, the Fed announced a $1.5 trillion injection of liquidity into the system. And that, should probably satisfy the markets for the moment. And obviously, I think they'll do more of that. In terms of the Fed next week, I suspect that they'll lower by 25 basis points. That is a near guarantee. Anything more than that, I don't think is feasible at this time, because I think that, while central banks are gearing up to stimulants, the governments are also enacting fiscal help, and so central banks can only do so much. And when you reach levels that you're near zero interest rates, it's very difficult unless they begin a fourth round of quantitative easing, but I don't think that's going to be the case. So I think we're looking at 25 basis point cut, and the Fed wanting to see what the numbers look like.
Right. Right, Peter. Thank you for joining us this morning, giving us your take on what this means for the market and the way forward for the market and what we can make out of the global cues.